Welcome to today's more important analysis videos on Friday 23rd of March with me, Richard Perry, market analyst at Hantec Markets. There's so much going on today, it's difficult to know where to start. Markets are under huge pressure to the downside in terms of risk appetite plummeting. Yesterday, trade protectionist fears have been sort of taking significantly on board as the equity markets have fallen sharply on the back of news that Donald Trump has initiated a memorandum on imposing significant trade tariffs of around about $50 billion on China. They could be more as well to come. China has responded to the original trade tariffs, which were on steel and aluminium products, but are yet to respond to the latest ones. So this is going to be a story that continues to run, unfortunately, and subsequently we're seeing equity markets significantly lower, risk appetite being hit significantly. The dollar came under pressure yesterday as safe haven plays started to benefit. Significantly benefited. The Treasury yield on the 10-year back down at 2.81%. We saw gold strongly higher. We saw the yen also benefiting. Let me show you a few of these numbers. Dollar yen back below 105, big figure. That's a big breakdown. Doesn't look good there in terms of the move towards sort of 100 in due course potentially on the yen. On the dollar yen, and also gold breaking up above 1341, which was a near-term key resistance area. Look at these equity markets, sharply lower. FTSE well below 7,000 now. That was a key area. DAX looks like it's going to be retesting its February lows now. And yeah, it all looks pretty negative in terms of sentiment. The DAX underperforming. DAX is a big export-heavy index. Links to obviously the global trade and subsequently anything that impacts negatively on global trade. DAX tends to underperform, and that's what we're seeing today. The dollar rolling over yesterday, not decisively breaking down though. Interestingly, 89.40 on the dollar index is a key level that the market is still looking at. Hasn't yet broken, so that's interesting. But if it does break, you can see that I think it could continue to go lower. Now, in terms of what we're looking at for today, we've got durable goods and new home sales for this afternoon, so nothing really on the economic calendar for this morning. So let's scroll down to that. You've got durable goods. Where are durable goods? Here we go, up top. 0.5% on the month, which would be a significant improvement from 0.3% negative last month. And then new home sales expected to improve by around about sort of 4.5% towards 621,000. But markets are going to pay little attention to this. I think it's going to be significantly more on the politics of Donald Trump and trade tariffs. Add in the fact that he's chosen a very much of a foreign policy hawk in John Bolton to his team. That doesn't help matters either in terms of risk sentiment. So my chart today is Aussie yen, which is a classic sort of signal of market risk appetite, and it had a sharp downside break, 81.5. I'll zoom out and you can see the importance of 81.5. Massive low. Dating back to November 2016, i.e. just after Donald Trump was elected. So we've seen that market breaking strongly down. The configuration is distinctly negative on these momentum indicators. On a longer term basis, it doesn't look positive. We've got this downtrend channel forming here in the last sort of couple of months. And lower highs, low lows, breaking down, not decisively moving lower today, although just sort of dropping away. But the fact that we're below 81.5, below 81 figure, which was yesterday's low, pretty much. Interesting that 80.50 is coming as a basis of support today. You could argue 80 big figure is a bit of a low as well. A bit of a pivot area on the old levels back from 2016. But 79.74, having broken back below the 50% fib level, you're looking at 79.74, which is 61.8% fib, and that looks likely, I think. So selling into strength on Aussie yen certainly seems to be the way. That's not Aussie yen. Why is that? Seems to be the way to play it. So here we see the hourly chart. You can see the old supports becoming new resistance. So you got a sell zone pretty much between 81.24, 81.70 area, 81.80. It's a pretty decent sell zone, I think, for any rallies. So yeah, looking at that, and I think any sort of unwinding move is a chance to sell on Aussie yen. You'd need a break up above 82.57, which was Wednesday's high, to really start to think about a turnaround, but even then you'd still be in the downtrend channel. So with that in mind, I wish you good luck in your trading today, and I mean that, and I'll speak to you later.